Righto, everybody. Today what I'd like to talk about is something that I think big business does very, very well that small business doesn't. There are a number of things small businesses probably do better than big business, usually around service, but there are some things we can learn from big business that will be very useful for small businesses that some do, but most don't do. And it's going to sound a bit technical in the first instance, but they have in the main, the big companies, ones on the stock exchange, have something that's called their dividend payout ratio, which might sound very jargony, and I suppose it is, but essentially what's happening is they are looking at how much profit they make in a year and then working out how much of that profit they can pay out to their shareholders as a dividend, being mindful they have to pay their tax. They need the working capital to run their business, so to pay all their bills on time, their workers on time, and then also some money needs to be set aside for the plans they've got for their business to grow it, or to buy another business, whatever the case may be. Most small business people, unfortunately, don't do any sort of version of that, and it obviously would be very, very useful if they did. And not everyone runs through a company, so you might call it something else, but we're talking about simply in terms of a small business, it makes $200,000 profit. Taxman's going to get a piece of that, and then how much can be pulled out by the owners to live off, and then how much needs to be left in the business to run it. And there's a little bit of a chicken and the egg problem that you're going to have for many people here in where you start from. You can either start from, well, I know in a sense, to run my family, I need this much money every week, let's say $1,000 for argument's sake, to put food on the table and so forth, and pay for kids doing this, that and the other, entertainment, whatever the case may be, fuel in the car, and then sort of seeing, well, how much money is the business making? Hopefully it's obviously something more than $50,000, and it needs to be, something again on top of that because the taxman's got to be paid. And then making sure that we've got enough left over to do all those things. So you can either start from what I need as a family and then work backwards, or I guess the way big business more does it, where they don't have to worry about the family because it's just hundreds and hundreds of shareholders. They'll start from the business's point of view and say, right, the business plans to grow 15% next year, so we're going to need a bit more money in the working capital. We're going to open 3 more shops, whatever the case may be, buy more trucks. Small business people have their version of that. They might be looking to buy another excavator or something, a new van, whatever the case may be. And so the companies are working out how much money is required to do all those things comfortably, not pushing it to the limit and sort of only just getting there. And then saying, righto, having made sure we've paid the taxman, we're paying all our employers, we've paid our suppliers, and we've got the money left over for what we need to do, the new things we want to do in our business. This much is left. It turns out to be 40% of profits for argument's sake. And so that's what we can pay out as dividends. Now in the family situation, of course, some people are going to hit a problem that having done all those calculations and worked out what's left over of the profits is 40%, it might be the family budget needs something more than that, needed 60% of the profits, and so now you've got a problem. And again, this is good because it forces you to confront that problem rather than just be stumbling along and slowly digging yourself in deeper. So now you've got to work out, well, 1 or 2 things have got to happen here. Either the family spends less money or the business has to make more money to bring those 2 things into line, or some combination of the 2. Whilst, unfortunately, many small businesses, they really are just trotting along, have a couple of good months, there's more money in the bank, so they think, righto, let's go out and buy a new boat or take the family to Bali, whatever the case may be. There's virtually no science and arithmetic behind doing that. That's where big business is much smarter than small. Another question a lot of small business people will, in a sense, ask, well, how much do I take out for myself? And also a related question of, should I be on wages myself? So many businesses, some structures you can't, sole trader and a partnership typically, but for most that are in a company or a trust or something like that, you can put the owners on wages check with your accountant before you definitely do it, but by and large, usually that is a very good idea. It enables you again to do that exercise. Say, righto, the family needs $1,000 a week to function. So we're going to put, mum and dad might be on, a 25 grand salary each to get 500 out, sort of, obviously a bit of tax on top of that. And that takes care of day-to-day living. So you've got that covered. It also has the advantage then that you will do a bit of super to put aside for the future. You've hit that, so that's taken care of, and then you're watching your business, you're watching your figures, and then hopefully you're making a profit bigger than that. And then from, again, typically the companies will do this dividend exercise twice a year. They will say, righto, we've got through, family's been paid for, there looks to be $50,000 of genuine money in the business that we haven't needed for anything else, because it's built up over time and hasn't gone down below that. We can obviously pay a dividend out of that amount of money. Remembering, don't forget the taxman gets a piece as well. So that's a very good way to go. But that, of course, does assume that your profits are bigger than those wages we've talked about. If you're in that earlier category where the drawings are this big and the profit's only this big, you've got a problem, and that needs to be fixed first. But that's basically what many businesses do. So I think doing the wages is very good. It ensures a proper amount of money is coming out. It stops largely that just your spending goes up and down with how much money's in the bank, and 1 month's really good, so you spend a lot of money only to find next month you needed that money. It prevents all that sort of behaviour where the spending's just erratic and goes up and down with good and bad months. Nice and even planned spending keeps the cash flow under control. Also very good if you're ever coming to sell your business. People can see it has covered the wages of the owners. Bank managers like it because it looks very organised and well managed, and it should see you have very good sort of financial management and capital management in your business to run through for the year. So that's number one, I suppose, is doing that exercise. Do the calculations about what is required. I'm making this much profit. Some has to go to the tax man. Some needs to stay in a business to just make it function properly. I want to do a couple of new things in the business. How much is that going to cost? And then after that, there's an amount of money hopefully left over for the family, and hopefully it's a number that is bigger than what's required. That works fine. And then also, ideally, if you can, probably having worked out what that amount of money is to go to the family, you do set up the proper wages, ideally. You don't have to, but ideally, ensures that's done, in a very organised, regular manner, every fortnight or whatever you do your wages. And then there's an amount of money left over at the end of the year or every 6 months that you can then sit down and say, how do we most effectively spend this money in the business? And then you really should be having a sort of financial and capital management that's as good as the big shows. You are doing essentially the same thing as what they are. So very useful practice. These are the sorts of things we will be talking about in our seminar that we've got planned in October about stress testing your finances and covering these sorts of issues. So look out for the ads on the website. But otherwise, go away, do that exercise, see what numbers you come back with, and hopefully it all works for you.